uh, there are some things I'm going to be sharing with you that are important stores that you need, excuse me, you need to pay attention to. And if you can get these stores right, your trading is going to change. Okay, you are going to start seeing the market differently. And we're going to be talking about zones. Zones. Okay, some of you call them, some of you talk about support zones, support zones. Some of you talk about resistance zone. Some of you call it the supply, supply and demand zone. Okay, but whatever it is that you call it, well, they all perform different functions, and you must not mistake them for themselves. And as a trader that is looking looking to become successful in their trade, one of the things that you must learn to do is the ability to understand where you are trading from. And the last time I spoke with you, I think one of the things that I mentioned is the ability to learn how to trade from a zone to zone. And when market comes back to zone, okay, where you can take your trade and move from point A, point A, point A, okay, point A to B, okay, point A to B, okay, and then you move to this point B becomes your point A again for another movement, and then this new place becomes your point B. Okay, so forex is a very technical system of trading. Okay, and as technical as it is also very easy to understand. It is very easy to understand, but is it hard? Yes. But is it possible to be understood? Yes. And for you to be able to understand this system of trading, you must understand what zone is all about. Okay, you must understand, you must be able to see the chart differently. Well, I could have started teaching you about and start dragging any people here and there, drag ICT, drag smart money, drag all of that. But one of the things I discover is that people that are making money, real money in the market, are not dragging anybody. I'm sure that you guys don't know that Warren Buffett is a forex trader. In case you don't know, is a stock trader. I mean, he's a trader. So I trade different stocks, and you never see him come and say, "Oh, ICT is straight." No, 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 no. Now, those are people that are, we can call him part of the institutions that trade this forest for us. Okay, that trade this forest for us in such a way that that they are the one sometimes that determines the movement of the market. Okay, and today there are a few things I'm going to be showing you. Last time I told us last time that liquidity means money. Liquidity is where money is resting. And then today we're talking about zones. So we're talking about our so what we're talking about today is an order flow zone. Order flow zone. Okay, that means that the zones where orders are flowing from. Okay, others, we call them others, excuse me, others flow zone, OFV. We call them OFV, you know. No, OFZ rather, other flow zone. And then we have the volume, other volume zone. Okay, this is not OFV, sorry. This is OFZ. All right, other flow zone. Okay, so as a trader, one of the things you must be able to do is to be able to identify your order flow zone. You understand? And when you are able to understand your orders flow zone, you will know where orders are resting. Now, as a trader, it is important for you to be able to trade successfully. You must be able to identify areas where there are zones. You understand? You must be able to identify areas where there are zones. And what happens in that zone? A zone is not any place serious. A zone is just where people that has the largest of. Last time I told you about others, yeah, we other blocks. I told you. So what other flow zone? Other flow zone is the advanced zones. Is the advanced place for other blocks. Okay, one of the other flow zone is the advanced order block. You know, other block. You know, a lot of you set other block, and you wait for market to get to the other block. Hopefully, hoping that it's going to, it's going to reject, and that when it rejects, you are going to, you are going to um um you are going to start you are going to take an entry there. Okay, so excuse me, sorry about that. So your other flow zones are your zones, other flow zones or other flow volume are your areas where we are having volumes. And in the forex market, wherever we are having volume, we are expecting markets to react in those areas where there are volumes. We are expecting the market to react at that zone where there are what? There are volumes, okay? And anytime there is volume in the market, that means that there is a presence of the big boys, the big institutions that are ready to take orders, that have placed orders there in thousands of lots, with thousands of lots. And it is your own responsibility to be able, sorry, can you guys hear me now? Can you guys hear me? You can hear me, say hi now, please. My network, my phone was interrupted by call, sorry. You can hear me?
Hi, I can hear you, sir.
All right, just type hi. Just type hi, please. Just type hi. You can hear me. All right. What about now? The network is stable. What about now? You can hear me? Let me know. Is it still skipping? Is it still skipping? You can hear me, let me know. Okay, good. Just type hi. You can hear me, please. Okay, good. Okay, Fizzy. Okay, sorry about that, guys. Call interrupted. So what I was saying the other time was that the order flow zone is where the big boys are entering. You can call it order flow volume. You can call it order flow volume. That means that it is the area order flow volume. That means that it is the area where there is it is the area where there is a lot of orders that are resting there. There is a lot of volume that is resting there. Volume means a lot of volume resting there means that people or the big boys have set their orders there. There is an indicator we use, but my trading view is not a paid one. Okay, so I would have loved to show you, but I don't use it actually. I don't use it actually. So these days, I don't do too much of leaving trades for too long. See, I'm a businessman. Okay, and as a trader, you should when you start trading, you should come to the market as a businessman. First as a trader and also as a businessman. A businessman makes profit at every opportunity they get. In the market, don't live to be right. Live to be profitable. Don't try to be right and show how long of the time the market moves. Some people that 5 pips, they are out of the market because you are using big lot size, they're out of the market, whatever amount you did to them, and they are out. Understand? Except you have put your trade on risk-free trade and it's going, the trade is going risk-free. That is when you can say, oh, okay, let me leave it for how long I want to. But you should trade to be first be right, be profitable, not to be right. Okay. And tonight I'm going to be showing you, I think we talked about orders before. I'm going to be showing you the order flow volume, the order flow zones. Now, first, we'll talk about the zones. I'm going to show you where these zones are, where we see these zones, and how you can identify them, how you can relate with them, and how you can take advantage of those zones for your own benefit. Okay, how you can take advantage of those zones for your own benefit. Now, I'm going to show us something this night. Okay. Okay. Now, wow. Okay. I'm not talking too much. Yeah, I'm coming. Okay, let me look for other peers. There's a particular trade I took today, AUD JPY. Let me go and show you something now. AUD JPY. Do I have AUD JPY? AUD JPY. AUD JPY give me some trades today, and then let's go and look at some of my. Let me show you somebody's writing on my screen. Please, can you just clear it up? Let me show you some of the reasons why I took some trades today on AUD-JPY. Okay. Now, remember the first thing I said. Remember the first thing I said. Remember the first thing I said about the last time about liquidity. What does liquidity means? Liquidity means areas where money is resting. Liquidity means areas where money is what? Where money is resting. Now, what is happening around this area? Okay, what is happening around this area? What is happening around this area? Okay, so liquidity means anywhere that money is resting, anywhere that you see money resting, areas that are obvious. Now, this is an area of liquidity. This is an area of liquidity. There's liquidity here. I'm sure you guys understand why there's a liquidity here. Because of this place. Liquidity is here. Liquidity is here. We have liquidity here also. Right? Now, one of the things you should do when you are trading all this stuff is look to your left. Look to your left. Whenever you're trading all this stuff, look to your left. Because for you to identify your zone, let's talk about this zone first. Your zone is the zone, the area that initiated a major move. Your zone is the area that initiated a major move. Let me say that again. Your zone is the area that initiated a major move. Your zone is the foundation of a major move. Your zone, I have a reason why I'm repeating that, is the foundation of a major move. So let's go. So I told you about time frame correlation, time frame analysis, and why you need to use a right time frame while you're trading. Okay. Now look at this. Look at this. Look at this point. Look at this point. This is the zone that was responsible for this down movement. This zone is the area that was responsible for this down movement. Can you see how the market came down massively? Now, this is an important zone for you. Now, if you draw this zone, you will notice that when market go to that zone, the market reacts sharply. There is no password, sir. I don't know why it's asking for a password. I don't think there's a password. The market reacted sharply. Are you feeling me? The market reacts sharply, even though that reaction is not a lot of reaction. Your stop loss may not be it, but to year, that reaction was 30 pips, which is almost more than enough profit for some people. Even at 20 pips, some people would have left the market. Look at now. Let me explain again. Your zone is the area, is the foundation, is the source of an impulsive move. That is your zone. Now, it doesn't mean that that is where all the volumes are. Now, this is an order flow zone. Doesn't mean it's an order flow volume. Okay. I know that some of these things are going to sound very, very strange. Now, look at this move. Now, look at this up move. Look at this up move. What is the origin of? Where is the origin of the up move? This is the origin of the up move. That zone is the origin of the up move. This zone is the origin of the up move, right? Now, let me delete all of this. Come in. Now, okay. Now, let me show you something here. Guys, pay attention to me today, because what I want to tell you is going to change your trading game entirely. I need you to pay attention. Now, remember when I was talking about the issue of liquidity? This area in particular has liquidity. Now, this is the skill and the strategy that I use. I learned it from someone, not my boss, and it works like magic. Now, pay attention, please. Now, this is the area of liquidity. Liquidity is here. Every time the market breaks a liquidity zone, every time the market breaks out of a liquidity zone, all you need to do is to wait for the market to come back to the origin of that zone. All you have to do is for you to wait for the market to come back to the origin of that zone. Anytime the market come back to the origin of that zone, that is going to be your entry. Now, you can use this order block as your entry, but as long as you can pick the zone, in fact, sometimes I can pick it even from up here, but by the time I go to my similar time frame, I can see the trade better. Now, you can see, can you see this area of liquidity here? You have seen that this liquidity area has been broken. It has been broken up. You just wait and allow market to come back to that zone that initiated the movement that broke that area of liquidity. Now, this was the candle that broke it. This was the candle, this particular green candle. This particular green candle was what broke it. And the moment the liquidity that broke this zone, and the moment this liquidity zone was broken, it has invalidated this place. It has invalidated this zone, this area. That this area is not an early zone. So all you need to do is now, this is an order flow volume. What means is that there is a volume of order here that is waiting to be activated. That is why when market went up, it came back to that order flow volume, activated it, and went back up. Are you sleeping here, guys? Let's say that your entry was here. This is 114 pips in profit. Guys, are you sleeping? Are you here or not?
Yeah.
Yes, sir. I can hear you, sir.
Does it look strange to you? I don't know if you guys are flowing with me.
I'm following you, sir. But as a learner, it's looking somehow strange to me. But I'm trying to understand, sir.
Okay, now.
Sorry, hello.
Yes, sir.
Sorry, sir. Can you hear me?
I can hear you.
All right, so I wanted to ask, why is that level with the blue line? Why is that your liquidity zone?
Why is that? Why is it my liquidity zone?
Yeah, why that high?
Okay, that's a very good question. Were you in my liquidity class?
No, I was not.
Okay, liquidity zones are areas where the market has rejected, like where the market get to and rejected sharply, for market to get there and reject, and that means that there is something of importance there that they went to pick out that was there. You understand? So there was, and because also money is resting here, others is resting here, stop loss of people be resting here. Do you get what I'm saying? Whoever is planning to sell the market is going to be selling from that point. It's going to put their stop loss up there. I don't know if you get what I'm saying.
Okay. I'm with you.
This is the you have seen this engulfing candle. This is a rejection. You understand? This is a rejection candle, and then a bearish candle formed that created an engulfing. That's like a double confirmation. Now the rejection and then engulfing. So now they feel like, oh, this market is supposed to sell. It has shown an engulfing candlestick, and then so if they are trying to sell from anywhere from here, as they are trying to sell from the close of this candle, they put their stop loss here. So there's going to be a lot of stop loss or a lot of traders here. You understand? Now market didn't sell. Market shocked them, went back up, went back to clear their stop losses. Where money is, where there is stop losses, is always where the retailers usually look for to set their stop loss is where our market goes to pick liquidity. So now liquidity is now that area where they have set their stop loss. So it goes there to clear the stop loss. Now that movement, it has not done that movement here. Now it after clearing the stop loss, pack liquidity, it now came back to the original zone that it created here and then went back up. Now you understand? Now by the time that the market, the retailer will have seen that this thing has taken me out. Now it's buying again. They will close their sell position and then enter for a buy around it. Now they will buy. Their stop loss could have been somewhere around here. Can you see where I put my stop loss? Can be somewhere around there that okay, this thing is going to buy, it's already flying now. Market did what it did. What did the market do again? It came down and took out the liquidity. Now this is another liquidity area, and took out that area and cleared it out again. And see a market broke through it. Now, this is the origin of this drop zone. And if you notice something here, at the origin of this zone, if I was to pick up this zone at my other flow zone, I was to pick it up, I would have picked it up from here. I'll pick it up from here. Probably candle, the week, and then sometimes I just pick the whole, I can just pick the whole of this as my other flow zone. And then look at it, market came back to this zone. When the market came up to this zone that represented like another flow zone, market reacted. Even though it wasn't much, market reacted because it is another flow zone. It has cleared every liquidity that was present there. This is 23 pips, 21 pips. That was something. It has cleared, it has, I don't know how God, how do I explain it? I'm coming. Look at this now. Look at this area. But although I don't know, I don't do much of selling. I sell, I look for selling opportunity, but the thing is sometimes looks cleaner for a buying opportunity. But I do the both though. Now look at this. This is the candle. This candle broke this zone, but this is the zone that was responsible. And these are other flow zone. This was the zone that was responsible for this drop. Now, the moment market goes back to that zone, there are most of the time, there must be a reaction. And look at how it reacted. Now, let's go and see this on our small time. I'm coming. Let's try and see this on our small time. I don't know if you guys are following me. You guys are getting what I'm trying to show you. Let's see 30 minutes, right?
Yes, sir.
Now, I'm coming. Now look at this now. This is the area of liquidity. Market has broken the area of liquidity, but it rejected downward a bit and went back up again. Now, if I was going to be very precise with my entry, but this I could have said, I would have set it to also actually. But sometimes for me not to miss out on the entry, I can even do it this way. So when the market keeps coming down against me, I will enter here with a small loss and I will keep adding position here. But my stop loss will never exceed here. So I always set stop loss. So even if it gets to my stop loss and it is, I know that well fine. That setup is no longer valid. You understand? And then the moment it got back here, I was in this trade. Look at this place, area liquidity. It broke it. This was the zone that was responsible for it. This zone, look at that market activated that zone. Activated because I would have picked up, I didn't pick another block. I didn't pick additional reference. I picked the whole zone. And if I pick the whole zone, market would have activated my limit and stood for a while before continuing buying. Don't worry, we'll look for more examples now. So that what I'm saying, it might not sink at the moment now. It took me a long time for this thing that I've just mentioned to you within a few minutes. It took me almost forever for it to sink. So don't worry, it took me more than 3 months for what I'm trying to explain to you this time. It took me a long time before it sank. Now, remember that our other flow zone is the zone that originates a particular major movement. Our other flow zone is the origin of an impulsive move upward or downward. This is the origin of an impulsive move. You can mark this origin out and wait for the market to come back there in the future. Anytime market comes back there, can you see that market go back to that zone I just showed you now? Every time market comes back to that zone, okay, didn't get there yet. In the future, you are going to look for an entry. But because some of us are impatient traders, I mean, we do intra-trading, we just want to scalp. That is why it's better for you to pick your zone first on the higher time frame, 4 hours, and let the market trade into your zone. Market will always trade into your zone because the market trades from zone to zone. The market trades from what? From zone to zone. Now, Let's look for more example. Let me go to gold. Let me show you. So most of the time, what I use is 15-minute time. I come to 15-minute time frame to come and check out for this stuff. I was in this gold. It took me out, but I re-entered again. So all this, I was in this. I think I shared it on group on my status. I was in all this move, all this buy move. I was not by move because what did I see? Now, I am expecting. Now there has been a break here. Now this is what was. This is the zone that was responsible for this what? For this movement downward, right? Now, what I'm expecting is for the market to get into this zone. So I can just mark all these areas. That's after my stop loss is always wide. And the moment I have moved, the market has moved forward a bit, I secure my trade. I secure my trade. Now, it might look wide to you, right? You might want to refine it, go to the smaller time frame. Sometimes I don't refine it. As it's getting upward, I open for with a small lot. As it's getting upward, I let it go upward a bit. I placed a lot and I had it. I placed a lot and I had it. And my stop loss is sometimes here. The moment it takes me out of here, I come back here again. I put my stop loss here and look for another entry to expect another entry in case the market is going to come. Because market has to react to this zone because this is the zone that was responsible for this down movement. This meeting is going to end in 1 minute, so I'm going to send a new link. I think I should join this up. Okay. So I'm going to be waiting for market to get up here, and when market gets up here, that means that the market is obviously reacting to something. So market moves from zone to zone. It's always looking for that zone that it needs to react to and to respect. So I'm going to send a new link to you guys.